Good morning, everyone. Welcome to Diamond's Edge Live. My name is Greg Diamond, editor of 10 Stock Trader at Stansberry Research. And this week we're looking at a wall of worry in the stock market. If you talk to somebody on the street or you just look at the news, you're looking at tariffs are concerned, inflation is concerned, the Fed is concerned, war is a concern. All of these things, get piled on, and yet the market keeps rallying. We even looked at certain time factors over the last couple of months. Mid-May, we saw that short-term top. Late June, we saw the Iran-Israel, the U.S. bombing Iran, and the market just took it in stride. This is a classic example of the stock market climbing that wall of worry. Now, does that mean it's going to last forever? No, but this week I'm going to show you what I'm looking at and how to trade that, and then what we can look forward to over the next 3 to 4 weeks. Okay. So let me share my screen here, and I'm just going to start with the S&P futures. I tend to I like to look at the S&P futures. I like to look at all futures markets overnight, in the morning, before the U.S. wakes up, just to kind of get a sense of what's happened overnight, how support levels to look at. I traded for a large hedge fund and traded the European hours from 1 o'clock in the morning until 11 or 12 o'clock U.S. time. And I just got into this habit of seeing what happened overseas, seeing what happened in the U.S. futures market to set me up for the day ahead. Okay, so that's never left me. And as you can see here, okay, this is the S&P futures, and you can see, basically since the start of July, we've kind of gone sideways. Okay, but if you look at it at a larger time frame, again, we're just climbing this wall of worry. So I mentioned mid-May, we saw this drop. Okay. End of June, this is when there was the bombing of Iran, but then there was a ceasefire. Boom, stocks like it. Now what are we looking at? Yesterday we had CPI, Consumer Price Index, a little bit of a tick higher, okay? But PPI, Producer Price Index, just came out this morning. No change, okay? It was actually less than expectations. Stocks are liking it. Bonds are dropping a little bit. Interest rates, bonds are rallying. I'll get into bonds at the end and kind of what I'm looking at with bonds. But in the S&P 500, you can kind of see what we're looking at here. So when I look at a short-term basis, I mentioned to 10 Stock Trader subscribers that next Monday and Tuesday, which is January 21st and 22nd, and I'll mark this on the chart right here, okay, marks 72 days, 72 trading days from an important low. And what is that low? This is the low on April 7th, okay? So I can go right here, and I can go, and this is into the 21st, but you see 71, so you get to July 22nd, and that's 72. Well, what is that? 72, 144, 90. These are certain Gann numbers, and I encourage you to look at this, okay? From a measured high or low, okay, measure out certain numbers. And I cover this in 10 Stock Trader a lot, okay? And there are certain numbers that Gann like to look from an important high or important low. 72 is one of them, all right? So when we look at this mid-May that we were looking at, that marked an inflection point. Was it the biggest? No. We looked at late June. Was that an inflection point? Yeah, it was a low marking it, or rallying into what we have now. So you never know whether it's going to be a big inflection point, a small inflection point. However, what we can use then is, when we have that time frame, is to look at what Elliott Wave is doing. All right. So if I were to take all this together, this is what I'm looking at. And again, this is just from a short term. 1, 2, 3. This has all the components of a wave 4. Now, I'm not sure, and this is what I'll be looking for over the next week. Do we get a low into this July 21st, July 22nd here, and then we get a rally into the first or second week of August, which I think is going to be a much bigger inflection point, okay? Or does this just does this mark a wave 3, so we get a pop over the next, call it 5 trading days, okay? We get a low into very late July, and then we get that 5th wave higher into, again, the first or second week of August. If this is the case, this is where we can maybe look for some divergence. And what would I look for in divergence, all right? There's some classic sectors that usually tell me what divergence I'm looking for, okay? This is IWM small caps, all right? And so when we think about the overall market, like S&P has made a new high, okay? The Dow's right there, the NASDAQ has made a new high, but you can see that small caps have not. All right. So what we could see is something like this heading into August. Again, still climbing the wall of worry, but let's say we get something like that, okay, into August, and then we get a much larger correction. Now notice how this does not make a new high. So that would create that divergence where the S&P, the NASDAQ are at new all-time highs, where small caps isn't. Now, does this situation mean that we're going to go to some kind of crash? No. It simply means we're going to have, and it could be very, very minor. Like, look, we were looking back at mid-May, we had this drop, okay, it was very minor. Is that something that's going to happen again? We know that August 1st, the tariff rates are going to start to kick in. Do we see the market just take some profit on that? It's kind of a sell the news event. Okay, we obviously could get into overbought territory. It could just be positioning. It could be something else. Okay, Ukraine, Russia, Israel, Iran comes back into play. The Federal Reserve, right? There's a lot of speculation around Jerome Powell getting fired. I don't know if that's going to happen, but maybe we get more inflation data. Okay, maybe earnings start to kick in, or it could be just simple positioning. All right, we get into a situation where there's a lot of greed. All right, and the market needs to correct itself because the market likes to hurt the most people at the worst time. So if people start chasing that, that's the situation where we could get that correction. I'm not going to sit here and tell you exactly why something is going to correct. All I know is that based off price and time, okay, over the next 3 to 4 weeks, we're looking at this wall of worry continue to happen. All right, and this is the logical scenario. Now, whenever I point this out, there's always the opposite. What happens if what we're looking at is a low into the 1st of August and next week this July 21st, July 22nd happens to be a high? Okay, I can live with that. What would that look like? That would be something along the lines of this. All right, so we get a pop into July 21st, 22nd, and then we get this correction happening in August where this is actually the lower high in IWM and S&P and NASDAQ just hang about above new all-time highs for a little bit, and then we drop. Okay, but this would be a phenomenal buying opportunity. I think here's the biggest point. Whether we get the high into August or we get a low into August, this has started a new uptrend. Okay, and so within this new uptrend, any weakness that we see, and not any weakness, but if we see a 5 to 10% correction, that's going to be a buy the dip opportunity that could create some really good trading opportunities. All right. So another sector to look at is XLF. Excuse me. Get that right. There we go. These are financials. Goldman just reported its biggest intake of revenue ever. That's pretty important. Okay. So we can see here, financials made new highs. All right. So if we take the same concept of what I looked at, the S&P 500. Even the small caps, all right, we would get something like this: 1, 2, 3, 4, 5, all right, and that is something where we might see a rising wedge or ending diagonal type formation, okay, and that gets us into August, and I'll scan out 1, 2, 3, 4, 5. I don't know why that didn't mark a 3, but that should be a 4. This should be a 5, but you kind of get the picture. Okay, so that would something we take some profit, and then look for that correction from August, into the latter half of the year. So I think this is what's important in terms of the stock market. All right, now let me briefly cover the bond market, and then I'm happy to answer some questions. Okay, so when I look at bonds, here's TLT. This is the iShares 20+ year bond fund, and you can see here that obviously bonds have gone down, but from 2023 we've seen some big moves in both directions, but it hasn't broken down below these lows back in October of 2023. Now, why are bonds dropping? This has to do, to me, not with tariffs, but with government spending. Okay, the big beautiful bill that just passed does not reduce any government spending. Are there some good things in it? 100%, absolutely. However, the spending doesn't stop. And I think when earnings so far in terms of the banks have been mostly, again, I just mentioned Goldman Sachs. If we see technology stocks continue that, earnings will continue to boost the market. But when you look at the bond market, this has to do with government spending. When you look back at 2020, late 2024, okay, we saw, September. So this is when the Federal Reserve cut interest rates, and yet interest rates spiked higher. Now, why would that be? I think the bond market was looking at, and this is right before the election, mind you, okay? The bond market was looking at the fact that no matter who won, Trump or Harris, the spending was never going to stop. It wasn't about tariffs, okay? It was about spending. Now, the other side of that is you can look at growth. That the market started to price in a Trump victory, and then we saw growth. Growth plus spending, government spending means interest rates are not going to dive down that much farther. Now, we went long bonds, and we're still in this position because it's such a tight risk reward situation. Okay, so we bought down here. If it trades below this low, okay, we're out. It's not that big of a loss. We didn't trade the options. All right, expecting based on extreme oversold levels that we would see a rally, especially with stock markets rallying. But that isn't the case. So we have to reevaluate what the possibility is. Now, bonds as of right now are rallying. Interest rates dropping because PPI came in much lower than expected, as I mentioned earlier. So I think this is going to be the main catalyst going forward in terms of what the Federal Reserve is going to do, how inflation is going to be gauged, and then in terms of the stock market. So let's take it in terms of just the correlation between bonds and stocks, okay? If we start to see bonds continue to drop, all right, and we make new lows, this is where I think you'll start to see the stock market pause the rally, okay? People start to take some profit because there's going to be interest rate levels that keep rising where stock investors start to get nervous. We're not there yet, obviously, with stocks rallying, but this is something to keep in mind. Again, and especially heading into 2026, but we're not going to get that far. So right now, in the short term, let's look at what's happening with this July 21st, July 22nd, very, very short-term inflection point, and then we'll look into August. But right now, stocks are climbing that wall of worry, okay? I'm happy to take any questions. Are there any sectors you recommend totally avoiding? Ones that you used to trade and don't anymore? That is a fantastic question. I do not trade biotech stocks because of the extreme binary nature. If you think of, whatever biotech or, healthcare stock, I don't trade healthcare stocks either. But if you think about the binary nature of this drug is going to come out and it has to be approved by the FDA or this phase within the approval process, and if one doesn't happen, boom, you're down 70%. Okay? To me, that's just gambling. All right. Now, I'm not saying that you can't make money on you. Obviously, you can make money in any market. But to me, the risk reward of trading that sector, I just don't like. Another one is natural gas. There's too many factors in terms of weather. Good luck trying to guess what the weather is going to do. Professionals have a hard time doing it. Okay. And then when I look at oil, sometimes you're trading against the OPEC cartel. That group of people are going to have more information at a faster rate than you are. Okay. Again, I'm not saying that you can't make money in those markets. A lot of people do. My perspective is that it's not worth the risk. Thoughts on RBLX? Let's see. Yeah, this is a strong market, strong trend. This bottom right with the rest of the market, and now is absolutely taking off. This is a leading stock. Maybe let's just look at this real quick on a short-term basis. Let's say it continues to follow the market, which it looks like it's going to. This actually is one that I might take a look at in 10 stock trader. Thanks for pointing this out. Let's say we get a 3, okay, we get a 4 and then a 5 into August, probably get a correction. This would be a fantastic stock to look for positive RSI reversals. And I've covered this in the show. I cover this in 10 stock trader, okay? But if you basically, simply put, if you get a correction, okay, within this stronger uptrend, look for levels on the RSI that make a new low while price makes a higher low. This is an excellent candidate for that. How did Gann come up with these specific numbers? Do they also apply to the bond market? They apply to every market. How he came up with that is a very, very, very long story, one that I can't cover right now, but that is the nature of his work. Understanding the cyclical analysis, these rhythmic beats within the market, that take place, both from understanding price highs and lows and then just natural dates. It can get a little complex. Again, I cover this in 10 Stock Trader, but he has studied the mathematical, scientific, cyclical nature of stocks, and that's where he comes up with these numbers. BTCS. Let's take a look here. This seems to be pretty spiky, and this is a stock. So these are the type of stock. Like, yeah, you get these big moves, but look at how long you have to wait for something like that to happen. Okay, while the rest of the market has extreme volatility, this just kind of goes sideways. And then, yeah, you have these big moves, but it just doesn't do enough for me in terms of, focusing on it as a trade, or, it's in my wheelhouse or on my radar all the time. Again, not saying you can't make money on it, but, this is something that I try to stay away from. How are we looking on gold this week? So this is something that I highlighted last week, and I'll highlight it again now. So we looked at the correlation between stocks and gold. All right, so if you can see here, gold topped out on April 22nd. Stocks made its higher low on April 21st, April 22nd, overnight, if you will, in the futures market. All right, and then gold's pretty much just gone sideways while stocks have rallied. Now, what I find interesting of late, and I think this is what August, you can see here, I have this August time frame. I think this is where this August time frame is going to come into play for both stocks and gold. Okay, is if gold's not breaking down below support, following that correlation. Okay, what we could continue to see is this continue to hold. All right, and while stocks are making those new highs, all right, gold actually starts to break out. All right, so I think that is a correlation I'm going to be watching closely and something to trade. The flip side was that, you can see this box here, is that we would actually have this drop into support, low in gold, high in stocks, and then it flips. So, considering that gold hasn't broken down, that tells me it's building up energy. I think I mentioned this last week. It's coiling. You can see here. All right, building up energy for an explosive breakout. Thoughts on IONQ? Yeah, this is these quant stocks are something I've taken advantage of and going to continue to look at. We traded D-Wave and quantum computing over the last couple of weeks. Had two nice call option trades there, and you can see here that this one, sort of a double top. It couldn't really break above this gap, couldn't make this new high with the rest of the market. All right, so this is something where I think, over the next few months, if it still correlates with the rest of the market, where I'm going to look to take advantage of, so IONQ, RGTI, QBTS, QUBT. Those are 4 quant stocks that I'm going to be looking at. All right. So thanks for tuning in. We have this short-term inflection point next week. We'll look at how that shapes up on the next show, and then what happens into August. Thank you very much.